Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I am responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Hey guys, I don't know if you missed me. It's been 3 weeks, and I, of course, came back on a week when we have some very exciting things happening in the market. So we're just going to go ahead and dive right in. So to start, I'm going to talk to you about Curve. Big surprise. Okay, so Curve is the decentralized stablecoin swap platform that is one of the fundamental kind of like building blocks of DeFi. So Curve over the weekend or on Sunday, Curve faced an exploit that was caused by a bug in the Viper coding language used for the contracts on Curve. So basically, it allowed this hacker to perform a reentrancy attack on the Curve contracts and drain money from Curve and a number of other DeFi protocols. A reentrancy attack is basically when the hacker can make a call on a smart contract multiple times and kind of trick it into thinking that it's a new call each time, when in fact it's an old one, and continue to drain money using just one transaction. So this led to mostly impacting Curve, but it also impacted a lot of projects that used Curve's contracts or had this as part of their documents. So there's other projects like JPEG that got hit, another one called Metronome, Alchemix, all were impacted. Curve was probably the most impacted, however, with this money being drained. I would say, though, the more important thing, or the thing that became such a big problem, was what this exploit set off. So Curve's founder, Michael Egorov, owns a large majority of the Curve governance tokens, and he's taken out loans on multiple DeFi platforms collateralized using his Curve holdings. Now, when the price of Curve fell following the exploit, these loans became in danger of liquidating, which would further hurt the price of Curve, but also leave the protocols such as Aave and Fraxland with a lot of what's called bad debt. Since Curve is pretty illiquid, it can't just be liquidated like Bitcoin ETH position can. So as Egorov attempted to top up collateral on Monday on these loans, a number of market participants actually pulled liquidity as collateral was added in an attempt to kind of stop out that loan and cause the liquidation. Egorov then got creative. He created a Curve pool to exchange FFrax and Curve USD with 100K in Curve rewards, essentially allowing users to deposit stablecoins and take on FFrax, which is a tokenized representation of one of his debt positions. And then they would earn Curve as a reward in exchange. So the pool only helped so much. And then since then, it's been rumored that there have been multiple OTC deals at around 40 cents per Curve token to crypto native investors to help him pay down some of this outstanding debt. So what we know today, like I said, is that this has become kind of like a problem situation. A lot of people have been watching it. To give you an idea, 50 cents is kind of about almost a 50% haircut from here, or 40 cents is about a 50%-ish haircut from here. But yeah, it's not been pleasant, and a lot of people have been wondering what's going to happen next. The Curve loans that are outstanding, if you're curious, there's the largest one is on Aave, and then there's one on Fraxland, Abracadabra, and another project called Inverse Finance. Those are much smaller. So the saga, like I said, is not over, especially since the issues with Egorov's loans has popped up before. The question is that, will we continue to kind of have this as an overhang in DeFi, or will it be resolved anytime soon? Well, keep you posted on how this one goes. But for now, Curve has taken quite a beating. It is down 22% just this week. We're talking about all the fun names this week. FTX. Okay, so on Monday, the FTX group released a draft reorganization plan for the exchange. The plan discussed the different groups of creditors and how they would be paid out, stating that everyone would be accounted for in USD at the time the bankruptcy was filed. So basically, the plan said, here's how we want to kind of have the bankruptcy run. They're dividing pretty much the main creditors, into kind of 3 pools, but they have a waterfall schedule for who is owed what. The 3 pools are .com and US, and then also just regular other creditors such as ones who are NFT holders, etc. And so they're kind of having to divide them into different pools of assets and split up the pools kind of pro rata based on that. They did note they didn't think that anybody would be made whole in this process, unfortunately. Expected, obviously. The other more important thing was the plan officially stated that FTT token and any equity stakes in the company would not receive any claims in the playout schedule, which again makes sense. FTT, for whatever reason, rallied 10% on the news of this reorganization plan, even though it explicitly said FTT gets nothing. But it has since settled back to prior prices. And specifically, FTT is up 30 basis points for this week. All right, next we're going to talk about PancakeSwap. PancakeSwap is the main DEX on Binance Chain, and it voted over the weekend to distribute the DEX's revenues to stakers of the Cake token. So this is really interesting because to date, most DEXs have kind of stayed away from this. They've just said, hey, our token is a governance token. It can use to be vote in governance, and that's it. This is definitely a step forward in token models. But essentially now stakers are going to receive 5% of the overall trading revenue on 1 basis point fee pools and 5 basis point fee pools. As I mentioned, this is interesting to us. Just it's been a recent trend in the market or theme in the market, starting with the Unibot trading bot in Telegram, which shares revenues with token holders. Currently, PancakeSwap is run rating about $89 million in revenue annually. That's based on last quarter's revenues, which brings 90 million annually at 5% is not a ton, but it's a couple $1 million for the small number of stakers. And PancakeSwap makes up 6.25% of DEX volumes in July. Again, I think this is very positive for projects long term if they institute this type of stuff. Cake didn't really react all that much to the news. It's up 2.4% for the week. All right, last I'm going to talk to you guys about the Prime token from Parallel, it's called Echelon Prime, technically. So Prime is a NFT-based card game, and it released the beta of its game earlier this week on Monday, I believe. So this is the first time that users can actually earn the Prime token for playing the game. And as a result, the Prime token traded up 18% on the launch as people bought specific in-game items such as keys for the game. This has definitely been a long-awaited game. It is in the card, style. It's definitely one of the more interesting NFT type or based games that we have seen. And interested to see if this model will take off, as it is slightly play to earn, but still not the copy and paste model of Axie, Krabata, DeFi Kingdom that we've seen in the past. So the Prime token is up 18% for the week, and we'll see if it continues on this tear. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.